The modern financial system is often compared to a form of debt slavery, where individuals, businesses, and even entire nations are trapped in a cycle of borrowing and repayment that seems impossible to escape. While traditional slavery involved physical chains, debt slavery binds people through financial obligations, high interest rates, and economic pressures that keep them working indefinitely just to stay afloat. But is this comparison valid? Are we all financial prisoners, or is there a way to break free? How debt became the modern form of control. Debt has existed for thousands of years, but in the past, it was often used as a tool for economic growth rather than personal entrapment. In ancient societies, unpaid debts could lead to indentured servitude, where individuals worked to pay off their obligations. While laws have changed, the core concept remains the same. Only now, instead of working directly for a creditor, people work endlessly to pay off loans, mortgages, and credit card balances, often without making significant progress. In the modern world, financial institutions have perfected this system by making debt not just a necessity, but an expectation. Student loans, car loans, credit cards, and mortgages are marketed as essential tools for achieving a successful life. However, once someone takes on these debts, they often find themselves stuck in a loop of monthly payments, rising interest rates, and an economy designed to keep them working just to make ends meet. The credit trap, how the system keeps you owing. Credit plays a crucial role in the debt slavery system. The idea is simple: offer people easy access to money, encourage them to borrow more than they can afford, and then charge interest that ensures they remain in debt for as long as possible. Banks and lenders profit the most when people make minimum payments because that keeps the debt alive, allowing interest to accumulate. For example, if someone takes out a $5,000 credit card debt with a 20% annual interest rate and only pays the minimum each month, they could end up paying double or even triple the original amount over time. This isn't accidental, it's by design. Mortgages operate similarly. A 30-year home loan can result in the borrower paying 2 to 3 times the original loan amount due to interest. This ensures that most of their working years are spent paying off debts rather than building real wealth. Student loans, the first chain of debt slavery. For many people, debt slavery begins with student loans. In the past, higher education was either free or affordable in many countries. However, today, student loans burden millions of young adults before they even start their careers. The worst part? Many graduates find that their degrees do not guarantee high-paying jobs, yet their loans continue accumulating interest. Unlike other types of debt, student loans are often impossible to discharge in bankruptcy, meaning they follow borrowers for life. By the time someone finishes paying off student loans, they are usually deep into other debts, car loans, mortgages, and credit cards, keeping them in a perpetual cycle of financial obligation. Had the illusion of wealth, are we working for ourselves or the banks? Many people believe they are working to build wealth, but in reality, they are working to pay off debts. Employers pay salaries, but much of that money immediately goes to lenders, banks, credit card companies, and mortgage providers. Even when people seem to have wealth, much of it is tied up in assets that still involve debt. A person may own a home, but if they have a 30-year mortgage, the bank technically owns most of it for decades. A car may be in their name, but if it's financed, the lender has control until the loan is paid off. This creates an illusion where people feel wealthy because they have access to credit, but in reality, they are just managing debt. True wealth means owning assets free and clear, not just having access to borrowed money. Governments and national debt, the biggest prisoners of all? Debt slavery doesn't just apply to individuals, it extends to entire nations. Governments borrow money through bonds, taking on massive debts that often cannot be repaid in full. Instead, they make interest payments indefinitely, keeping the country locked in a financial cycle controlled by banks and international lenders. The US, for example, has over $34 trillion in national debt, with interest payments alone costing hundreds of billions of dollars each year. This debt is so massive that even raising taxes and cutting spending would not be enough to eliminate it. Instead, the government continues borrowing, passing the burden onto future generations. Breaking free. Is there a way out of debt slavery? Escaping the cycle of debt slavery requires financial awareness and strategic action. While the system is designed to keep people dependent, there are ways to break free. 1. Live below your means. Spending less than you earn and avoiding unnecessary debt is the first step to financial independence. 2. Pay off high interest debt first. Credit cards and personal loans carry the highest interest rates. Paying them off aggressively reduces long term financial burden. 3. Invest in assets, not liabilities. Instead of financing cars or expensive lifestyles, focus on investments that generate income, such as real estate, stocks, or businesses. 4. Increase financial education. Understanding how the financial system works allows individuals to make smarter decisions and avoid predatory lending traps. 5. Challenge the system. Advocating for policy changes such as affordable education and fair lending practices can help future generations avoid falling into the same traps. Final thoughts. Are we truly free? In many ways, modern society functions like a financial prison. People work long hours, not necessarily to achieve personal wealth, but to service debts that never seem to go away. The financial system benefits those at the top, banks, lenders, and corporations, while the average person struggles to keep up with rising costs and endless payments. However, unlike traditional slavery, there is a way out. By understanding the system, making smart financial choices, and prioritizing true wealth over the illusion of wealth, individuals can take control of their financial futures. The real question is, will people wake up and escape the trap, or will they continue working as financial prisoners for life?